On today's episode, we are going to take a look at three new growth stocks. The first one's one that's in the hydrogen power. The second one's going to be one that's in the EV market and making both the vehicles and also making the batteries. And the third one's going to be that's in the health drink segment. All three of these are growing dramatically in revenue wise. And for each company, we're going to do the following. We're going to take a look at them fundamentally. We're trying to understand what the products they hit. And we're also going to take a look at technically how the charts are looking. If this is your first time here, make sure to subscribe to the channel, and to everybody, make sure to hit the thumbs up. It helps so much with the YouTube algorithm. You should also check the links below to all my social platforms. In my Discord channel, which is free to anybody that wants to join, I post every time I buy and sell, so make sure to join there. And also, you should see a link to Webull. If you join and sign up and deposit $100, we both get a free stock. I think right now they're doing a special where we might get more than one stock. Like always, my name is Jose Najarro. I am a self-taught investor who's been studying the market for over 6 years now. And if you want to learn about becoming a better investor, make sure to check out my Patreon, where I put weekly educational videos for those that want to learn and those that want to become a better investor. So let's get started. Plug Power. Plug Power stock. This is ticker PLUG. So Plug Power is an American company that engages in the development of hydrogen fuel cells that replace conventional batteries in equipment and vehicles powered by electricity. The company is here in New York and has facilities in Washington, Rochester, New York. So if we take a look in the past year, this company has returned 752%. That is insane. I mean, so now let's take a quick look at their technicals. I just want to see how overextended are they, if they are overextended from their moving averages. And so when I take a look at charts, there's two things I look at. One, is it overextended? Two, is there a lot of volume where the company is being purchased at? So unfortunately for Plug right now, there's not much volume happening here. But what I do see is not too overly extended from the short-term moving average, but for my medium and long-term moving average, it is a bit overextended. I want to say we have a nice amount of volume in this area. All right, so now I see it's not overextended in the short term of things, but it is overextended in the long term of things. Now, the next thing I want to take a look at is their numbers. How are their numbers looking? So Plug, again, it's traded under the NASDAQ. It has a market cap of $14.1 billion. That's a little bit higher than some of the stocks we see. I like looking at companies below $10 billion market cap, but I do have a few companies above that. If we take a look at future growth, analysts expect it to grow 29.6% on average for the next 3 to 5 years. This is what I consider a hyper growth. Anything growing over 15%, I consider a growth stock. Anything growing over like 20% is considered a hyper growth stock. Next, I want to take a look at they have cash flow from operations positive. So we can see they're not profitable right now if we take a look at GAAP earnings, and they don't have positive cash flow from operations. I usually don't care if they're not profitable in earnings, but I do want them to be positive in cash flow from operations, because that means they're making money from their everyday business. So right now, a red flag that I see for Plug is they're not profitable in their cash flow from operations. Next, I want to take a look at their financial health. Like I said, they're not profitable in earnings, and they don't have positive cash flow from operations. So what I want to take a look at is they have a lot of cash compared to debt. They have about $450 million in cash, and they have about $300 million in debt. So they have about 1.5 times higher, am I right, of cash to debt. So it's not the strongest balance sheet, but it's definitely good that they have that form of cash, because they're not profitable. Then I want to take a look at their ownership. I want to see who owns the business. Usually I would like to see some insiders own it, but I can see right now there's no insiders that own the company. Right now it's just the big boys, BlackRock and Vanguard, that own it. We can see institutions are owned by about 50% of the company, institutions, and the other 50% is owned by the general public. I honestly, that's pretty impressive that the general, I don't know if it's impressive, but it's something I don't see too often. General public usually, in my opinion, holds about 20% of most stocks. Usually you see institutions holding about 80%, and you see insiders holding like the other 10%. So for general public to own such a big percentage, that's pretty interesting to me. In the past year, in 2019, revenue growth grew 31%. In 2018, it grew 74%. And in 2017, it grew 20%. So the past 3 years have been a super growth company for this company, a super grower for this company. Now I want to take a look at quarterly revenue. This most recent quarter grew 80% compared to the same time last year. The quarter before that was 18%, then it was 89%, and then it was 64%. So I can see this is definitely a high growing stock. Next, I want to take a look at how their margins are doing. So this is, I don't like this. Their gross margins are very, very low. This is a company with very low gross margins. And even though their earnings are improving, I don't believe they're going to be profitable anytime soon. And the last thing I want to take a look about the company is their investors relationship website. So every year or so, a company posts about their company. And this one, they posted September 2020, so about 3 months ago. So it's fairly new. So I just want to see what Plug Power is on track for its 2024 vision of doing $1.2 billion in sales. $1.2 billion in sales is a lot compared to that $14 billion valuation. That gives them a forward price to sales ratio of about, I want to say maybe 13 or 12 compared to what they expect. But remember, that's for 2024. They're also expected to be profitable by 2024 and have operating income as well positive by 2024. They're developed with partners. They have 5 U.S. green hydrogen plants, and they're currently discussing to expanding into Europe. So that expansion to Europe can be great news for them as well. Let's take a look at what else. So here they're pretty much just talking about the renewable energy and how it's kind of the future. They're expected to have 500 plus refueling stations and about 85 tons plus positive they projected in 2024. So I'm guessing these are their projected fueling stations for 2024. And you can see, right, the states they're hitting are the states that are the most populated. Nobody cares about Wyoming. Nobody cares about Montana. Nobody cares about Idaho. We care about here, Jersey. We care about the West Coast. So it seems like they're also hitting different markets. They're having the material handling, and that segment is expected to be $750 million in revenue. And Plug, they're saying Plug will be powering aircrafts as well. That's actually pretty impressive. And I'm guessing that's where they expect a lot more of their revenue to come. They are leading the market with $310 million in 2020 gross billings. So that's pretty good, right? You always want to invest in a leadership company. By the end of 2020, they have about 40,000 fuels shipped. They have over 100 fueling stations. They have about 40 tons of daily hydrogen used. All right, so we kind of understood. We saw their fundamentals. Fundamentally, the company has high growth. It had a decent balance sheet. Unfortunately, what I didn't like was that it wasn't profitable and that it doesn't have cash flow from operations. I personally am not too familiar with the overall hydrogen fuel cell example, so that's maybe someone who's more familiar with that field. But overall, the company's mentioned that they are the leaders here. They're expected to be profitable by 2024. So that's 4 years from now. And right now, they are the leading market in the company. So I mean, I can see why investors would be buying into this company, especially ones that are more familiar with it. We are gonna take a look at BYD stock. So this is the BYD company. Let's take a look at them first. So BYD is a Chinese manufacturer of automobiles, battery-powered bicycle, buses, forklifts, solar panels, rechargeable batteries, trucks, with corporate headquarters in China. It has 2 major subsidiaries, BYD Automobile and BYD Electronics. Okay, so this is pretty cool, right? We can see they're pretty much a battery company that does all types of vehicles. So now let's take a look at the recent stock price. So this is traded in over the counter as ticker BYDDY. Again, if you're wondering how do you trade over the counter, certain brokers allow you to it. I personally use Fidelity, has been my favorite. All right, so BYD, pretty cool. Main thing right now, a lot of people might not like the fact that they're a Chinese company. I know certain people are not fan of investing in Chinese companies, and that's completely understandable, right? So in the past year, we see the company has done about 466%, and it's just driving up. Let's take a look at their stock charts, yeah, I can see right there, very, very overextended right now from its moving averages. And again, this doesn't mean the stock price will pull back, right? That's not what it means, but on average, it does happen. Sometimes two things can happen. The stock price can pull back down, or the second thing, the moving averages usually go up to those prices. And a mixture of both kind of happens in between. But I just don't like buying when things are too overextended. I am seeing, though, that there's a nice amount of volume between these price points right here. We can see there's definitely a nice amount of volume here. Very similar to a lot of volume in the cheap prices, but it seems like this is definitely a form of level that this company is seeing, some form of support, one can say. So now let's take a look at their company's investors presentation. But before that, let's take a quick look at their fundamentals and see how much they're growing. So they have a market cap of about 654 Hong Kong dollars. I want to convert that into dollars and see how much it's worth. So they are about an $84 billion company right now. This is actually a pretty big company. So for them to be that big, I hope they have some sales on them. So next, let's take a look at future growth. Future growth, they're expected to grow 17.6% on average. That's a strong growth company. They are profitable and they are expected to grow their profits as well. They have positive cash flow from operations. So right now, a lot of green flags we're seeing on the company. They actually do make a nice amount of sales, about $143.3 billion of revenue this past year. So that they're definitely making sales. And I just want to take a look at their forward price to sales ratio. So forward price to sales ratio is almost 1.0. This is actually pretty crazy, right? That's pretty low in my opinion, especially for a company that's profitable and that has positive cash flow from operations. At the same time, some people might be like, Jose, it's a Chinese company. Financially, they have about, where's their cash? They have about 13.2 Chinese yuan in cash and short-term investments, and they have about $60 billion in debt. So this is not my best balance sheet or my favorite balance sheet, but they are profitable and they have positive cash flow from operations. So that allows me to kind of overlook this kind of bad balance sheet. Let me take a quick look at ownership real quick. So we can see individual insiders own 37%, and that's actually pretty crazy. So the CEO owns about 18% of the business. The vice chairman owns about 15% of the business. Wow. Berkshire, Q, you didn't mention Berkshire Hathaway actually owns 9% of the business. I actually didn't know that Berkshire invests that much money, in international companies. I mean, I didn't think they would not, but I just wasn't familiar with any companies they did. So that's actually pretty cool that Berkshire has a portion on them. Now, if we take a look at their presentations, hopefully they have a good presentation for us. And one thing I don't like, completely off topic and has nothing to do with the business, I'm not happy with their overall website. I mean, if you're a company with about 240 something billion dollars or whatever we took at least have a better website. It really throws me off when companies don't have a nice website. All right, let's take a look at this. So the company is pleased to announce the total sales volume of the company for the month of December 2020. So at least this kind of gives us some information of what the company is doing. So new energy vehicles. New energy vehicles, unfortunately, is down 17.35% compared to the same time last year. So they're seeing a decrease in sales right now. If they're seeing this kind of decrease, why are people kind of really hyping this stock price up right now? Is it just because of COVID situation? Obviously, because of COVID, right now, it's slowing down sales like this. So they see a decrease in passenger vehicles. They've seen a decrease in battery electric vehicles and in plug-in hybrid electric vehicles by a huge amount. But they are seeing a strong growth in commercial vehicles, mainly in the buses. This is actually pretty cool. They're seeing about 44% growth in bus commercial vehicles. I guess China wants to buy more buses. In oil fuel vehicles, they're actually also seeing a growth. They're seeing a growth in the SUV segment. So overall, revenue has dropped about 7.4% compared to the same time last year. Not something I like to see, but remember, the automobile industry right now is definitely taking some form of hit, mainly the new vehicles because of COVID situation. More people I've seen are flocking into used vehicles. So we can see these are probably the products they sell. The commercial, I think it's pretty cool that they're focusing on commercial vehicles that have that are energy vehicles. So I want to see if maybe they have if they have some form of pictures of that. So they have passenger vehicles. They have the iPro. They have the I. I mean, I'm pretty all those symbols I don't understand, but they seem to have all types of markets in there. They're commercial vehicles. This is actually pretty cool. So they have 7 conventional types of vehicle and 4 specialized type of vehicles. I think this is probably the main reason people are probably investing in BYD is this overall growth here. Electric bus and coaches, that's pretty cool. They have electric kind of trucks, pretty cool as well. Sanitation vehicles, oh, that's pretty smart. They have electric forklifts. Electric forklifts, we actually saw a company yesterday about electric forklifts, and they're actually doing pretty well. So it's cool that they're also in this market. So now I can see why investors are really liking BYD. So this is, I feel like this is what investors are focusing mainly on, the commercial vehicles. Maybe do they have rail transits, or is this something they want to futurely do? They want to build electric rails. That's a huge future. And if they do it, I can see the potential in it as well. And they sell you the batteries. So BYD also has battery systems, they have solar power, and they have energy storage, which is needed when you have solar power and stuff like that. And they have new energy solutions. BYD has taken the lead in developing a new business model known as PV plus storage, aimed at eliminating bottlenecks in traditional photovoltaic power generation and meeting diverse market needs. Okay, so now I can see the overall trend of why people are investing in this company. Anybody have any thoughts on BYD? Did they like anything about BYD? I really like that the overall commercial vehicles. That's something, especially in a company like China, where they have a lot of cities that are developing, I believe. They're going to need a lot of public transit, right? So those commercial vehicles, I think, are going to be doing good well there. And if they hit international markets, that's a huge potential growth as well. Imagine them hitting like Central America, where it's a lot of travel through commercial vehicles. If they hit like South America as well, countries like Brazil and stuff like that, where there's a lot of public transit. Just because of the overall population in countries like that. So if they kind of expand into international markets, that can definitely be a potential grower, a huge grower for a company like this. Ed wants to take a look at Glucose Health, ticker GLUG. John Fidelity Fieldley is the director, and he is the CEO of Celsius, and it's up 80% since December 24th. So Ed, why didn't you tell us about the stock on December 23rd? All right, so Gluc, let's take a look. Glucodown kicks off 2021 with record New Year Day sales at Amazon. Pretty impressive. All right, so market cap. They have a market cap of $97.46 million. Pretty impressive, right? This is what I like to see. This is a super small company. So like you mentioned, in the past year, it is up crazy amount. What the freak? It is down 8,000% in the past year. In the past month, it's up 205%. Let's see what kind of information we can look them up. So this is in Arkansas. So they're an American company. They're sold out in Walmart, and sales are up 200%. Are up 200% on Amazon sales. So Glucose Health manufactures dietary supplements for people informed about diabetes and its system. The company products helps blood sugar maintenance, cell absorption of glucose, and serum, big word, for cholesterol. Glucodown kicks off 2021 with record new day sales at Amazon. Let's take a look at their third quarter. So third quarter revenue increased 91% beating preliminary estimates by 11%. So what kind of revenue? So Gluc's revenue increased in fiscal 2021 versus 2019 was driven by three factors. They have strong Walmart sales. They have new revenues generated from their product deliveries for Gluc down to CVS, and unexpectedly robust sales at Amazon. Despite inventory challenges for most of the third quarter of 2020, 2 of the 4 flavors of Gluc down were in sold-out status at Amazon. Nevertheless, sales of the 2 remaining in stock are Amazon more than outpaced third quarter of 2019 Amazon sales. This is insane. What is happening here? So, all right, so they had 91% revenue growth in this most recent quarter. But that's because some of their products were sold out. If those products were not sold out, their revenue growth would have been a lot higher. Man, this sneeze, I can feel it coming and it doesn't want to come out. Holy smokes. No, nothing. Holy smokes. So next week, Glucose Health will provide additional important updates to shareholders relating to its third quarter report. These updates will highlight the company's improving gross profit evident in the third quarter by the company's developing products. All right, so right now I'm liking it. So I want to see what kind of sale numbers they're running though. So we can see overall the product kind of seems pretty new. They only have 447 ratings. A kind of good stars here. Some of their products seem to have sold in 2018. Let's see what other products they have. So Gluco Down, they have all these, all with similar star ratings. They have a store on Amazon, 2 new flavors in 2021. Here in their presentation, they actually, not the presentation, in what we were just looking at, they kind of talked a little bit about the products they have. And they actually have a complete production trial, and hopefully a new website. You guys got to work on your website. Gluco Down. Oh, wait. See, so I hate seeing websites like this, right? It kind of looks a little bit, how can I say, a little bit shady, right? So they are, how it works, diabetic friendly tea mixes. It does look like $19.99. So it seems most of the times they're selling right now in Amazon. They're available in Amazon. 45 servings for the teas. They also have drink mixes, which are also selling. So these are the different products they have coming soon. Cappuccino mix. This is actually pretty cool. I mean, I don't drink sugar or anything like that. I mean, coffee. But coming soon, they have these 2 new. Hey, an horchata mix. I wonder how that tastes, if it tastes like a real horchata. Horchata. I hate saying horchata. Horchata. All right, so they have new products. Instead of new products, they should also work on the new website. But let me take a look at these numbers. Press release. Let's take a look at this press release. Let's see if we can find something about this damn company. But I really want to take a look at this information of their quarterly reports. So their quarterly reports, come on, can you guys, even their this is something I hate about small cap companies, is the way they present stuff. I mean, you can probably hire an intern and they can do a way better job than this. All right, so balance sheet. All right, so that's definitely something I want to take a look at. So right now they have about $213,000 in cash, and they have other payable notes, which is $163,000. Not too bad. They have more cash than debt right now, it seems. So that's good news overall. Let's take a look at revenue. So revenue was $126,000, right? All right. So right now, $0.13 million. What kind of price to sales ratio is that giving this company? So what was it? 697. So let's divide that by 4. All right, a price to sales ratio of 174. Again, it's still pretty high. I think it's probably still one of the highest I've seen so far. But obviously, investors here are believing this company will grow a lot higher. What I do like is definitely, obviously, that you mentioned they have that connection with Celsius Investor. So I have to take a quick look at that. Cost of revenue. So they're making, I mean, they have a nice amount of revenue, and unfortunately, right now, they are not profitable. And where is most of that money being lost from? Most of that money, I'm going to guess, is losing here Yep. So we can see, right? So this company made about $126 million, $126,000 in sale this year. Out of that 126, it takes about $60,000, and hopefully you guys can see. Let me zoom in a bit for those on phones. So it took about $60,000 to make that product. So overall gross profit was about $68,000. Out of that $68,000, they used pretty much all their money for sales and marketing. Because of that sales and marketing is the reason this company had those sold out products and why they had that type of revenue growth. So that's where most of their money is being used at. Okay, so understandable. Again, not something I like to see, especially because of the type of cash they have. The final thing I want to take a look at is cash flow. So net cash flow provided by used in operating activities. All right, so cash flow from everyday operations is actually positive. It's positive $11,000. And that's because so they make money from their everyday business. That's good news. They're not burning out of cash. They're also taking out, it seems, they're also taking out proceeds from preferred stocks. So they kind of recently did some form of offering where they got a lot of cash. So they have net cash flow provided from financing activities. So overall, they are increasing their cash. So cash end of the period is increasing every quarter. So overall, that's okay, right? So even though they're not profitable right now, they at least have positive cash flow from operations and they have positive cash flow in their business. So that's what I like to see. Still, right now, this is one that is insane, right? The type of growth it's seen right now is insane. And this is definitely not a company I would ever put, I want to say even more than 2% ever, maybe even 1%. But a 1% in a company like this can take dramatic growth if this really starts to kick in. I mean, right now we saw this is not even $100 million cap company. And this one definitely has the potential for huge growth. What I do want to say though is because it is traded over the counter, you won't find it in many markets. You might only, like I said, Fidelity is probably one that might have it. A second thing, because it's such a small cap company, it's going to be very volatile. Today it had a 10% day. I wouldn't be surprised if in the next 2 days, in the next week, it could have a 15% down day. So days like that are very possible for a company like this. For those reasons, this company will never ever hold a huge portion in my portfolio if I ever decide to buy in. I am actually really looking into learning more about this company just to have a small position in it. Another thing, since this is such a small company, it probably is very low in volumes. So you have to make sure to put a limit order when buying a company like this, because if not, you might the spread between the ask and the bid might be a little too high that it might eat you up. All right, I hope you all enjoyed today's episode. Like always, if you want to learn how to make analysis like me, make sure to join that Patreon. I post weekly educational videos. I'm also streaming on Twitch every Mondays and Tuesdays at around 8:30, 8:45 Eastern time. So make sure to come there and you guys can ask questions on any stocks you want. So take care, guys. Have a good night and see you next time.